Is Roblox stock set to start a recovery? After all, I did a video on Roblox a year ago warning investors saying, you know what, the valuation was a bit too rich. The fundamentals just didn't scream at me. There were other bargains that I'd rather buy. I called those out to my subscribers at unrivaledinvesting.com. Since then, the stock has continued to drop. And you zoom out over the last 3 years, Roblox has been in a ton of pain, down around 60%. So there certainly were better investments, despite the fact that a lot of investors got very excited during the COVID boom, looking at their growth. Folks were saying, man, this business is on fire. And the question is, and that's what I'm going to follow up on in this video, is does this business have the long-term growth legs that could stage a recovery for shareholders over time, potentially driving attractive returns in the future? If you enjoy educational investment videos, you're watching Unrivaled Investing, please hit that thumbs up, hit that subscribe button. So let's go through what we've seen with Roblox. Looking at their historical financials, this is using AI ticker chat and their AI predict feature. Looking at historical revenue, this business has grown significantly from under $500 million in revenue to over $2 billion in revenue in the last fiscal year. So not only a COVID bump, but strong revenue growth. And asking artificial intelligence, hey, based on, all these documents that you can read, what do you think the growth rate could be? It's looking at it and saying, yeah, it's projecting strong continued revenue growth in the years ahead. So this is something I want to see, in terms of can this business deliver in the years ahead? Because you need that growth to drive shareholder returns. Looking at bookings, that's my own personal preferred metric over revenue because revenue has a lot of accounting adjustments. Bookings is actually the cash coming in. Even though you had this tremendous jump during COVID, where the business was growing close to 200%, year over year in terms of people just spending money. I think at that point, parents were like, I gotta work, kids, here's some money, just go entertain yourself. And so you saw that aspect where you had this huge jump in spending. But even during sort of the post-COVID normalization, it didn't really drop that significantly, down 3%, down 4% year over year. And now it's rebounding again to around 20% plus, which does suggest to me that this does have legs. This wasn't just a one-time COVID beneficiary. This is truly a platform for developers and creators and consumers to play around with the various different, entertainments, the various different experiences that you can get on using Roblox. And looking at that, this data point, this thesis is reinforced by looking at the daily active users. Once again, you're looking at something that really didn't drop post-COVID. Post-COVID, you had this huge jump and it's still ticking higher quarter after quarter. You did see a little bit of a dip in the second quarter of 2022, but still looking at it, still growing strong overall, around 65 million daily active users using this platform. And management has a vision to get this to 1 billion daily active users over time. So if they continue on this path and they get there, arguably there would be tremendous potential for Roblox shareholders. So how do you think about this investment? Well, management talks about, look, we have these 4 different expense buckets, and it's really interesting, because when you look at each of these different expenses, you could start thinking, at least for a couple of them, how it actually creates a competitive advantage. So you have cost of revenue, which you should think about the server expenses, the, running this actual business, developer exchange fees. So those are the fees paid to the creators on their platform, saying, hey, thanks for creating this experience. We want to, give you a cut, or you created some sort of avatar or something that you could sell to users that people are buying. Then there's the actual personnel of running this business. And then there's the costs of making sure you have a safe and secure environment. So not only the infrastructure, but also making sure bad actors aren't overwhelming the system. So looking at each of these different components, for example, their developer ecosystem and paying it out, they're on track to pay developers $800 million in 2023. That's a lot of money, where the 10 highest earning creators averaged $27 million each. This is for the experiences on Roblox. Those are really, when you look at what's going on YouTube, the top 10, it's similar figures with like Mr. Beast at like 50 million and, a couple other folks around that 20 million figure. So you are paying enough for these top content creators that are clearly incentivized. I think, man, like $20 million, what am I doing? Maybe I'm doing the wrong thing here on this YouTube channel. Maybe I should be making finance Roblox games or experiences. But clearly there's a lot of money to be made. And it's not only the top creators, they're even talking about how the longer tailed number 1,000 in terms of their top 1,000, growing 2x faster over the last 3 years and is making $64,000. So you have an army, arguably the top 1,000 folks that are making, interesting amounts of money. $20 million plus for the top 10, and then a long tail of hundreds of people that are making hundreds of thousands or tens of thousands of dollars. That certainly is enough to sustain a rich ecosystem. So you have that aspect. And so that's a real cost of their business model. Think 10 to 20% of their revenue, going to that $800 million going to those creators. But that creates a flywheel. That's very much like YouTube, where YouTube owns this space. They continue to take share year after year. I think you might see a similar dynamic with Roblox, where it's like, hey, we're just paying it out to our developers. We're encouraging them. And I think as they invest in their infrastructure and make those tools available to their creators, then you get another flywheel type of effect. And they talk about the AI revolution, how, you can upload a picture of yourself and then say, hey, make me look like an astronaut. And within the next year or two, that's going to be something that they can roll out. And they've already proven it for themselves, in-house, but it's slowly rolling out to have like custom avatars. This is getting much closer to a realistic and practical version of the metaverse. And I'm hesitant to even say that word, just the amount of cash burn that companies have done and amount of money people have lost. And so I look at the AI revolution and think this is a company that clearly could benefit from it over time. That said, they do have real problems. So you have Edwin Dorsey. I previously had him on this channel. He runs the Bear Cave, a short seller, sort of investigation letter. And he's called out Roblox a couple of times as having real challenges. And, it does make sense. When you do have a platform, you're going to attract bad actors, especially if you have a platform that targets, younger audience. And they do have a sizable, audience that's under 13 years old and, between 13 and let's say 18. So that's a heavy amount of users. And so you are going to get some predators. And that is a real concern, and his articles do call out that some people have taken advantage of the platform. Now that's, the flip side to that is that if you're able to, once again, leverage something like artificial intelligence to better ferret this out, to say, hey, you really shouldn't be trading pictures or something like that, and catch bad actors faster, that can create another competitive advantage that makes it harder for another platform to compete. Arguably, I think what, the Bear Cave would argue is that, they haven't done enough so far, and clearly some of the stories support that. So it is a real problem. They are investing hundreds of millions of dollars into it, but they also face real opportunities. You see real brands activating on their platform, over 200 different brands, including NASCAR, H&M, Spotify, were 19% of the top 100 experiences. So this is, top 100 experiences. These are the games that are, generating a lot of money on the platform. 19% currently have ad units, and it should increase over time. So the question is, okay, they clearly have this opportunity with AI where it'll be easier. You could just type in, hey, create me this avatar, create this environment, create this game. So the amount of games are going to be exploding. You're going to have ad revenue that's just starting. So there's a lot of opportunities with Roblox, real challenges as well. You got to make sure, predators stay beyond the fence and don't get inside. The question is, where does Roblox stock go from here? First of all, in full disclosure, this is not financial advice. Also, quick plug, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscriber. By the way, I am planning on raising the rates shortly, so now's the time to lock in the favorable pricing. Looking at where does Roblox go from here. Once again, I'm checking in with AI Ticker Chat and their new AI Predict feature, looking at, Roblox stock, and overall, it's not penciling out something that's deeply compelling. It is sort of saying there's a wide range of potential outcomes in the years ahead. I agree largely. I'm in line with its revenue outlook, saying, this thing could be growing at a, low teens to maybe even 20% revenue growth rate in the years ahead. Where I'm not exactly aligned is the margins. It has trouble saying, hey, what could the long-term profitability of this business be, given that it's been so unprofitable in the past? So I'm not really, I think I would personally put in a higher rate, if I'm going to think about valuing it. I also value it using a different metric. I focus on bookings, but I'm also aligned on the multiple that for a platform like this, if they win, there's a good chance it does trade at a premium to the market. So broadly looking at AI Predict, it's 2 out of the 3 in terms of the key aspects of valuation here, the growth rate and the multiple. I'm largely in line with. If I, sort of put it into my own sheet, thinking about the valuation framework here, once again, I'm focusing on bookings versus revenue because that's the actual cash in. Thinking about their margins, I do give them a lot more credit in terms of where their, margins could be in the years ahead, penciling out 20 to 25% profit margins off of that booking figure. And then thinking about growth rate, similar to what we just talked about, around 10 to 20% annualized growth in the years ahead. I personally prefer to be a little bit more conservative with my valuation multiples. So I say maybe around closer to 20 to 25 times free cash flow, or 20 to 25 times this sort of adjusted earnings figure. And that gets to something where maybe you get 100% plus upside over the next 5 years. Maybe you're effectively break even. Keep in mind, this is a hypothetical framework, thinking about Roblox stock. Of course, stock price can go way higher, way lower. But to answer that question, could this be the start of a recovery for Roblox? It's certainly been a world of pain for the last 3 years for shareholders. I personally look at it, or last couple of years for shareholders, I personally look at it and think it's closer to a bottom type of situation. So I don't have that super high conviction to say, hey, this is just, guns blazing, this should just rocket from here. But I do think it's not absolutely awful like I called out previously, when it was at $50 a share and I was just like, nah, there are better opportunities. And let's do an honest, assessment of Roblox. Let's do an honest accounting of what they have. You have a founder-led business. You have a business with a net cash balance sheet. You have a business that historically even generated positive free cash flow. Now, some of that's because of, significant stock-based compensation. Some of that's because of, accounting with significant amounts of booking revenue, but overall positive free cash flow historically. These are key virtues of the business that I like to see. This is a business with real innovation, I believe, as they roll out their AI features and the investments they make in their infrastructure, that will empower creators and make it, and I would expect an explosion in future content and an explosion of additional users. I do think management's vision of 1 billion daily active users could possibly be achieved if they make the tool so accessible to users and they continue with their strong growth. I mean, they are growing bookings 20% plus this year. So that is a very favorable data point. So they have the innovation, they have the growth. They're clearly taking market share. Their value proposition is resonating with consumers. All these things are what I want to find in my holdings. And in most of my top holdings, they have these aspects. But the one thing that's still, I'd argue, missing for me personally is looking at this and having just the value jump off the page where I can say, this is a deep value, or the value, it's just extremely likely that even in a conservative scenario that I make a reasonable amount of money over the next few years. I'm not quite there yet. So that last component of, does this have compelling valuation? I'd say not yet, but could the stock recover from here? I'd put it at a solid maybe. Like very reasonably, like there's a lot of very favorable attributes, and the valuation certainly is much better than when I previously called it out. And management, I'd argue, is starting to, is executing with their growth. They did a pretty good job navigating through COVID, the highs and the lows. And the question is, can they start getting to real profitability? Now, management thinks they'll be able to do it, next year. So I want to see more of that, showing real free cash flow, real profitability, not just stock-based, compensation adjusted figures. And if this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.